Hey everybody, happy Wednesday. Let's do a little Q&A, shall we? So we're gonna start by just doing what we've done before. So if you've been part of these before, we'll just kind of walk through some of the objectives of what we're trying to do, and then we'll go from there. We're going to review the 4 questions we used to ask and answer before we get in, but we're going to do that by doing a random playbook example. So here's how I want to start is, somebody give me a date and a product. And the caveat, I know someone will offer the ES, and they'll want to see the ES because you all are just determined to trade that that product, even though I don't know why. But that's what we did last time. So if no one else submits that, and that's what you really want to see, but here's the deal: you gotta give me a historical date and a product. So that could be ES, Nasdaq, Russell, crude, gold, Bitcoin, soybeans, and a date, and then we'll see if we can find a playbook trade, and look at that within the context of these 4 questions. So that because here's kind of my primary conviction is that I'm running into a lot of developing traders who are on the spectrum, right? So the spectrum is I'm still searching for an edge, or I found an edge but I'm not consistently profitable, or I'm consistently profitable and I don't want to lose my edge. So those are all pretty consistent postures to be in. On the I'm still searching for an edge, or that I found an edge but I'm not consistently profitable, almost without exception, what I'm encountering when I do audits and have insight sessions with traders is they are very focused on a triggering behavior. They are not focused on destination discovery. And the framework for an analyzing price movement in a chart and having a playbook trade are determined to be the exact same. And in practice, that very rarely is the case. So what we find is that the narrative. So if you're putting together a trade plan and you're saying here generally I believe the market's going to go to X or do this, that's a narrative. That's the context upon which you're going to look for your playbook trade. But it is not the playbook trade. And you can have a narrative that incorporates, prices that we go to, and that actually you don't even take a trade because it doesn't fit the criteria of your playbook trade. Pulling those 2 pieces apart, I think, is a bit of the beginning of wisdom around how to come to markets. Is that you can't do one without the other. You do need to have the narrative contextual plan and view into the markets, but at the same time, you need to be able to express that via a actual playbook trade. So, the challenge around that is, why aren't traders thinking in terms of playbook trades? Because it's not taught. So it's not anybody's fault. So our objective is to get you skilled up on that. All right. So, like I said, throw me a date and a product, and we'll go back to that date and see what we can find. And maybe we find something, and maybe we don't. Okay, I've got one bid for Russell on the 20th of June. Got any other bids? If not, we'll go with that one. And thank you for that not being the not being the ES. All right, here we go. So I've finally got all my stuff lined up here. Let's do that. So we're gonna go to the 20th of set this up. So first off, if you don't have a platform that allows you to be able to trade back historical dates, I would highly encourage you to get one of those. Look, we're already set at 620. So we're going to go to... All right, we're going to stick with this date. And maybe it's great, maybe it's not. I don't know. So some orientation. At any given time, I want to know where the most traded price the last 5 days is. Done a YouTube video on the posture of the auction. We look at 3 variables: price, most traded price the last 5 days, most traded price the last 20 days. And helpful to know where those are at any given time. So if we look and see where we're trading, you can see we're sitting right on the 20 and the 90, and we're below the 5. So that means this 21.21 is pretty important to what we're wanting to do. So let's put a line here, or just a zone. Yeah, we'll use that one just because we can. All right, so that's our 20 and 90 days. So we have 20 and 90 day here, a large composite, and we have the 5 day here. Yesterday's session was a normal higher day. So we extended the IB high, and we essentially had rotations. We were trying to get above the 5 day SMA, which is just a good general bias reference that is widely followed, especially among like chartered market technicians and hedge funds. If you're looking at more intraday type of bias stuff, if you want more positional, it's going to be 20 day, and then obviously like the 50, 100, and 200. Is there anything special about those? I mean, 5 days is 5 days, and everybody thinks in terms of weeks and months, quarters and so forth. So it went up, was unable to get into that price. The most traded price of last week, so this is a weekly profile. You can see the beginning of this week here. On Friday, the 13th, there was a get these out so they're aligned correctly. So we had a very tight balancing day here, and then see the big move overnight. This illustrates well the idea of, when you see tight compression, what's going to happen next is you're going to see some movement. And then this day was neutral. So it means losing some conviction around that 20 and 90 days. So here was, fight around that. Here we are again. We got a little bit loft over and we're coming back. So we're still back here. So these sellers that were impulsive overnight back here, they're essentially still controlling the auction. And, we're in this place between these references. So in terms of magnets, it's going to be this one and it's going to be this one. We're set to open below the prior day. We have a naked point of control or an untested reference here at overnight low. So, what am I thinking about? So here we're set to open outside of range. And outside of range or in a gap. So when we talk about a gap, we mean in completely different RT or real-time ranges. So that means it's outside of that prior day's cash range. That's a gap, right? So right now we're set to open with a gap. Whenever I put together a trade plan, I think about one, who had control of the prior day, and then what would change that. And my primary plan is built around where that control would be expressed in the next session and where would it be challenged. So when you have, in this specific case, I do have IB high extension. And if you want a really, really simple rule of thumb, kind of set your bias with whoever extended the initial balance last. In this case, it was buyers. The also value was higher than this prior day. However, we were unable to get through these sellers, and we closed back below the 5. So it's a little neutral. So I would, if not having seen any of the overnight trade, I would say, hey, coming into this session, if the most traded price is like 2140, if I'm generally above that and I can get above this range, I'm going to look for a push back to the 5-day. And if I roll below this, that would challenge that narrative, and I would expect that we would roll back toward the 20 and 90-day, and if we got below that, we could actually push and take out these overnight lows that we have not yet tested. If we were to gap and we held above this range, that's the magnet. So I have one in range in the bias, gap in the direction of the bias, and then if we open with a pre-IB, like we've challenged who those buyers are. So when that happens, as this is the case here, then I'm on the sidelines for an hour. So we're challenging the buyers from the prior day. I'm on the sidelines. So let's go ahead and start playing this, and we'll stop it once we get the initial balance set. Now, real quick, I've got weekly VWAP and monthly VWAP right here. If we can get back inside the prior range, we should go back up here and hit this destination. I do have a playbook trade that would be to get to that prior value. What I don't like about it is I've got these composite VWAPs in the way. So I'm less inclined to take that. So that would be the only other thing that, like, if it happens in the first hour, might entice me. And as I don't, so we're looking at this at 30x speed. As I don't know what happened in this day, I don't remember. I don't know when a trade will or won't come, so I'll kind of call it out as I see it. We're looking for playbook trades, and I'm kind of cycling through, playbook opportunities in my head. Now let's pause this for just a second. So we're almost through A period here, and we're above the 30-second opening range, and looks like a fairly directional open back into the prior range, which, that could be something that we lean into to get back up here, and that would be what we call a prior value test long. But I'm most likely going to, see if I can enter that in B period, not in A period here. So let's keep going. And you're going to notice the fight around those composite VWAPs. Okay, now we're in B period. Okay, so now we're in B period. We're inside the prior range. Basically, where's the trade? Where's the potential trade? So a couple things that I'm looking for, some little responsive move back this way that holds halfway back, so it does not get below 2130. And then I'm looking to trade this way toward my chief target is here at 2145. That also aligns with overnight high, and in 98% of all sessions over a rolling 5-year basis, we will take out the overnight high or the overnight low in the RTH session. Okay? So now we can pull out our guns, and let's see if we can find a spot that's interesting. All right, so I'm back in the area where it's getting close to being interesting. So now I'm going to get over here to a smaller time frame. I know where my destination is up there, right? 2145. Got to get above these VWAPs, but if I can pull back here, let's also slow this down. Make it 10x. 5x. So what I'm doing is I'm trading up into that price, but I know it's going to be a fight around that monthly VWAP. I can always add more above that, and I'm playing in this range. I'm looking for this prior value test. Now, prior value test. Let's talk about this trade here for a second. Let's get back. Let me pull up the slides for the as yet uninitiated. So whenever we take a playbook trade, and these are my playbook setups. Okay, so this is the Rolodex of things that I'm looking for in my head whenever a market's going. Okay, and the one that we're highlighting is this one. Every playbook setup has an answer to 4 questions. So there's 4 questions you have to ask and answer before you place a trade. What are those 4 questions? First one is what is the opportunity or the target? So in all of those setups, there is a defined, hey, this is the target that price should go to. That's critical because if I don't know where the opportunity or the destination is, it's hard for me to assess and appropriately right size the risk for that. Without knowing where the destination is, I am just picking arbitrary risk. And here's how that gets experienced. You'll end up experiencing it like you'll be like, oh, like I put this trade, I think it's going to go in this direction, and then it hits your arbitrary risk because you just had to set like a risk that you defend or that you're okay with losing, and then it turns around and goes in that direction, and you're like, like I was there. And that's part of the function of it's an arbitrary risk. It's not set relative to the reward. It's also not, whenever we're setting risk, okay, one, I mean, this if this is the reward and this is the risk, they should be in asymmetric relationships. We're always typically looking for a 3-to-1 to help us, not have to be right every time. But it's not an arbitrary 3-to-1. You guys know what I mean by that? Like, it's not I always risk 10 points. Is that a risk strategy that you can replicate? Absolutely. It does not suggest that that the market cares about your 10 points, and you can set better stops. So in this case, where I'm looking for this 2145, and I see strength off of the open. So let's talk about the 2145 in greater than 65% of all instances over a rolling 5-year basis, which means that's more than 1,000 dates that are looked at. If we are inside of the prior day's range, this is the probability that we will tag the point of control of the prior day. So it's a greater than 50-50 odds, and the longer that we spend inside of the prior day's range, the more likely that's to play out. So that's what defines why we're going to get that. And then compound on top of that, that's right next to that overnight high, which we already talked about that. So I've got 2 key normative auction behaviors that I can lean on to anticipate why I'll be at that price. Then I have a directional open. So, I mean, we could call this an open drive open. I think would probably be the best way to describe that is we've got an elongated A period and then B period. So long as we stay north of, kind of 50% here, any responsive selling should find buyers. So, where am I going to set my stop? So my stop is going to be right below the mid, so they can come down and test that. And it just happens to be right next to the prior low as well, which is a known reference. So they come down here and tag this, but if they get below that, then increase the probability they're going to come down here, and that we could rotate and even take out that open, because now we would be outside of that prior range. So that's the area that I want to defend, and that's the area that matters. So picking some arbitrary, I'm going to give it 3 points or whatever in here, that really isn't something. I mean, like, it could easily hit that and go in the right it wouldn't matter. The other piece about this prior value test, and this is connected to questions 3 and 4. Okay, so when you're putting on a trade, next is what would tell you that you're right. So, within this trade, we've already kind of spec'd out this is the destination we think it's going to go to. That's in a prior value test, that's going to happen before the first hour is set. After the first hour, I'm looking at other playbook opportunities. So a prior value test is only good in the first hour of the day. So that would tell me that it's right, is that we're getting closer to that and moving in that direction, seeing tempo pick up in that direction. We're able to get above, in this case, the monthly and weekly VWAP, because that'll help flip participants in the direction we want to go. What would tell me that I'm wrong? That we go back through halfway back, that we fail to stay in the prior range, that the sellers that met us at those composite VWAPs held. Like those would tell. That's what should not happen, and it's likely not going to work. I'll get out of Dodge and wait for the next playbook trade. But if you immediately want to increase your probability of success, and your process is to go back and look at every trade and say, can I express my trades in these 4 questions? And it's my conviction to start off is if there's no target, there's no trade. And why? If there's no target, there's no trade. Because if you were to go back and look at your trades, I would imagine that many of them are not. I mean, they're not based on the target. They're based on some triggering behavior, which means you are completely driven by the emotions of the participants around you, and that's an easy way to get trapped. Or you'll get a little bit of excursion in that direction. Maybe you're really good at reading impulse and you get in, but because you don't know where to carry that to, then you get a little bit of green and then you get out, and then there's that experience of, oh man, I should have look what it went to, and it's the I should have, would have kind of stuff. Yeah, no, don't do that. So if there's no target, there's no trade, and if you don't have an answer to these questions, there's no trade. Every playbook opportunity has a driving input. So there's one characteristic that's present that dictates why one of these is in play or another one is not. For the prior value test, it's that we're outside of a prior range, and now we're in a prior range, and we have a naked point of control. That's all that has to exist for that to be on my radar. Now, I'm cascading through that in the expression. All right. So we've already had some, like we put on, took off, and then I'm going to add more. If we get above that 37, we'd have kind of a clear window up towards 45. And what I mean by clear window, I don't think this is something that a lot of traders think about, is that there are, when you have references clustered that a lot of participants are looking at, and for example, weekly VWAP and a prior low are references that a lot of participants are going to look at. So it's very likely you're going to get reactions at those prices, but there aren't any references here. So it could easily be that we just like bang around in here for a bit, and then finally, once we get above this, we just take off. Okay, we'll see if that's how that plays out, if we can even get above those prices. We'll see. So let's carry on, shall we? And let's see. I think I'm going to even get this down to a even finer size here, so we can kind of suss this. All right, let's rock and roll. So on this one that I've got right now, stop here. Now, if I get the buy stop in at 37, again, we're looking for 45 and higher, the kind of 45 to 50 area. Then my stop is going to be at 33 if we take out 37. So effectively, like, this is my risk window, and that's my profit window. And notice that the point of control just shifted up here. Like, now the ETH is down here, but RTH is shifted up. Now also see we got some some strong buyers that stepped in, so now we got our full position. So we can now pull this all up here. We've got a little bit of bullish imbalance in the profile. So there's below value area low, but not really much up here. So we're looking to push up toward that overnight high. question in here. So again, gang, if you have any questions that you want to go over, then we'll. So we want to stay in that upper distribution. If we get in that lower distribution, you know, more likely that we're going to go down here. And we're at you know, almost halfway, almost, you know, a third through B period. What I want to see, I do want to see us get above and stay above that weekly VWAP. Like, we're getting fight as you'd expect. I want to stay above that because that will help them, you know, participants flip in that direction. So we could sit here and fight for a little bit. Would not be unusual. All right, let's speed this up, shall we? We're working on trying to pull that ETH VPOC up there. Okay, so now we're into C period. So our prior value test did not get there in the time that it was supposed to get there. So we've got some decisions. One is that we can just, you know, tighten our risk. The belief that we get to that destination is still valid. And the fact that we have, you know, this buying excess is in play. We still have an open overnight low that are still open. If I take out IB high probability I go get to that. So, you know, I have a prior value test at the moment, but it didn't get to there in the time. So I will watch, and if it looks like it's at all failing, we're going to get out of that, and we're just going to cut it. However, if we were to go up and take out IB high, that could put us in the place of an IB go with. And I can actually add to the position at that point, looking for it to push in this direction. So let's play that out and see how that is behaving. So we're going to just really kind of tune in here. Hold the deltas, baby. Hold it. Actually, we're going to wait and see if they can test that. Hop back above it. Yeah, we're going to get stopped. Okay, so now we're flat. So now we're just on the sidelines, and then we wait and see if there's IB extension. So if there is IB high extension, we can absolutely put this trade, you know, back onto the upside. Otherwise, we're waiting to see. There's nothing for me to do at this point, but you know, wait to see if we can take out the overnight high or the overnight low. So let's pause that. Fire away. Also, when a trade doesn't work out, here's a great tactic. Get to a higher time frame. Okay? If it did not work out as you were expecting, get back to the time frame where you're looking for playbook trades. Otherwise, it's increasing the chance that you will then find some trade to do that's not a playbook trade, and that's not setting you up for success. So now I'm back here, and really, unless I can get above that IB high, I'm uninterested. Okay, we're now into another period. So we're in D period. We are still, I mean, and here's a idea of, you know, narrative versus, see how we're building. This is just very skewed. So this is to say, as long as we stay above here, we should press in this direction. The challenge is that weekly VWAP. Like that's the reference that we're getting, and monthly VWAP, and that's the reference that we're getting participants fighting around. Eventually, they're going to tip the scales, and we're going to get some clean trade. But in the meantime, stay on the sidelines and don't try to fight it. Okay, so now we're back in. We have extended the initial balance high. All right. We are still looking for that same destination. Now the question will be, how, do we stay outside of this, or do we again rotate back in? Now, you'll notice that we're getting kind of this 45-degree angle going on. So I could come back to the point of control, but I don't want to get below here. So I could pull back here and even get some more on before we push up in this direction. But the presence of the kind of the 45-degree angle is a clue that those participants, like when we rotate lower, those sellers are not getting paid, and they're more likely to give up. So now we can go back to that smaller time frame. We'll just stick here for a second. Oh, real quick, let me get my stop in here. So all right, and let's slow this down. Now, if you notice this green showing up here, so that is order flow imbalance in favor of the buyers. So I'm watching that, as I'm executing, I want to see more of that, right? I can see some selling imbalance up here, but I'm seeing more buying imbalance. As long as this holds, I want to see them go up and take out that selling imbalance. Coming back to those prices should find more of those buyers. Tell me I got company, other people that want to go in that direction. Still fighting around those VWAPs. So, one of the key lessons here is, when you're looking, for excursion, check, are there references around there where there's going to be fight? And, what are references that could be a fight? It could be a composite VWAP like this. It could be a GEX level. It could be a known reference like a monthly mid or a prior week high or prior daily high. Like any reference that most participants can see, regardless of the time frame that they're executing on, are ones that you want to pay attention to. Now, I don't like the fact that the deltas are negative here. That's not great. We want to see that flip. And it could be that this fails because we ran up into those VWAPs, and all we're getting is all right, so this is kind of our pull, this is our pullback idea. I don't think it's going to get through that. I think they're going to, they ran up into it and they're going to reject out of it, is what it looks like. Buyers are just not strong enough. All right. And we get below RTH VWAP, and the script can flip, and we can run all the way back down towards the open. Yep. Okay. All right, so we're done. Didn't work. Could not get through those references, right? So that's the key takeaway, is like that fight, and then who ultimately won was those sellers. So at this point, where you're getting closer to lunch, you can kind of make a couple different decisions. So we have several times gone up into these areas and rejected, right? So I can have an alert back above here. I mean, it's still valid that this is clean if I could get above that, and I just can't. Where's my risk? My risk is if I keep trying to fight that, I can just keep doing damage to myself. So I got to respect it. Clearly, there's someone who wants to take all offers there. Okay, great. Let them take the offers, and it may be that we roll down. But at this point, whenever you get stopped like this, you pause and you go, all right, what would have to happen to present another playbook trade? And, I would start that with alerts. Like I would have an alert down here at the open. And then I'm going to have an alert at the IB high. Because I can picture in my head, if I can get above that IB high, then we could push in this direction. If we get down here at the open, I still have the IB stat in place. In terms of, I know how many times we go neutral, which is only about 30% of sessions. But I still have that stubborn overnight low stat also in play, that's a huge normative behavior. I'd be interested to watch what happens here. If I get all the way down here and let's say we go neutral and then come back inside the range, then that would be for me an extension fade long. If we get out of here and get tempo, I could do an IB GW short. If we come down in here and can't make it through the IB low and then find buyers that step in, like maybe down here at this mid or or at this node here, that could be an IB GP long. All of those, if I go out of here and come back inside, if the VPOC's still here, that would be my target. Or we may build more, so that would be my target. If I'm pushing outside this way, I'm going to go look for this overnight low and then see if I can push beyond that. And if I can get up here, I'm going to go there. But I'm not at any of those places right now. So now I'm free to just set some alerts and then we'll see. So let's do this. Let's stop and figure out how that rest of that day played out. Thinking. Okay, while it's thinking. So there is a this question came up. So for an IBGW setup, if the IB high is right at VWAP times 2 or plus 2 or 2 standard deviations VWAP, where is that? Okay. So let's kind of draw this scenario. All right. So let's say we've got an IB high. So there's our IB. We take out IB high, and IB high is right at. So if I had a VWAP. Here's my VWAP, and then here's, 1 standard deviation. Here's 2 standard deviations. It's like right there. So the question is, if like entering here feels like I'm entering at resistance. So the first question is this resistance? What makes 2 standard deviations of VWAP resistance? And then other things that I would ask is, at what time have we hit this? Because if let's say I had A period and B period, and then right at C period, I've got a VWAP that's like this, and I hit 2 standard deviations like that, this thing's only going to keep going higher the whole day. But let's say that I have IB high, I've been balancing all day, and then I take out, my VWAP is flatlined, and so it may take more momentum to push it. So timing and development are crucial in the answer. Like, how do you assess that out? It's a timing and understanding what exactly does a 2 standard deviation VWAP tell me? Like, what's it tell me when price is hitting there? What's happening to market participants when that happens? And the other piece of that is, well, how wide is this initial balance? Have we only used, like, if that happens, if we hit that and we've say only used 50% of the expected range of the day, and we've hit the ATR of the IB, I'm going to buy that all day long. This is like, gang. This is I will at sometimes at night, just for like kicks and giggles, I will go on to Reddit, and I will read in the trading, people looking for help with trading. And somebody posted the other day, and they're like, oh, I've got a great strategy. So the strategy is that whenever I have a significant RSI reading, that means that the auction is oversold, which they don't even say auction. They say the market's oversold, and so I'm going to short it. Right? Maybe you've encountered something similar in your development. Okay, question. What does RSI mean? Like all of these indicators that people put on their charts. What does an RSI mean? What is it measuring? Somebody tell me. Hopefully you even know what it stands for. Right? It's relative strength. And what is that strength relative to? It's relative to a look back period. So it's looking at the strength of price movement relative to a look back period, which is typically, it's like a 14 period. The question is, like, why a 14 period? I think it's Wilder that was the one who did the math on that. Why that becomes kind of a standard. Anytime you apply an RSI, it's always like assigned like that as a default. But it's saying that I have increasing strength in the last relative period. I have increasing, like I'm hitting significant strength. An auction that's in a move is going to exhibit strong strength of movement of price in the move phase. If you try to counter that and fade that, when that reading is high, you should, just stop and just write me checks. It will be cheaper. What you have to do is you have to think about, guys, the only fundamental that we lean on is human behavior. That's the only one. And humans, when it comes to an opportunity, so let's think about like an RSI, and we'll see that thing like kick up, and then it gets above these like lines that people put in there, like that's the oversold or overbought part, right? But that's a peak strength. That's not how auctions turn, especially when we're talking about equities. Equities do not see V tops. Okay, topping is a process. So I'm gonna go higher, and then that momentum is going, and then price is gonna get shut off. But that's not a turn, meaning it's not going to be going all the way back in this other direction. It's just going to be shutting it off. Meanwhile, what's going to happen is that this momentum is just going to stall. So then if I see price try to go this way and this momentum doesn't go with it, and then it starts to roll, and then we start to go this way with the RSI, that is the better entry. Not here, because this could keep going and just wreck me before I go. So if I think about any of these indicators, like momentum indicators, roll them up into the idea of how is this describing what participants are doing as they're expressing this, and then I think you have some better ideas on how to use them. Okay, let's go back and look at how that day went that we were trying to do in the Russell. I don't want the pen tool. Stop the pen tool. There we go. Okay, let's go back here. Okay. So those sellers held all day long, even when they tried to get back above that. But notice they got up here in these red bars was over lunch. If I was looking at that and had that alert, I would have probably looked again to see if I, could, but it would be a right or right out right at the IB. So that would have been a real tight thing. But then this traverse over lunch that went neutral. So they got down there, that alert, I would have looked at it and then they would have gone neutral. And then from there, they did offer the go with short because they really weren't able to get back inside the IB. So the IB go with short to the overnight low was the idea. Isn't it great? I mean, I feel really good about, where I took the stop. Because you're not going to capture all of this stuff. It's physically exhausting. So what you're looking for within your narrative is you're looking for pockets of places that you can express, and there's clarity around where the expectation is, or not. So, all right, gang. That's all I've got for today. Unless anybody's got any other questions, we'll land the plane. I'll stick around here a little bit longer just because it took us a little bit to get going with all the tech problems. Oh, that's a good one. Yeah, I know what they're looking for too. Yeah, thanks for pointing that out. So, no, that's the same thing twice. Hang on a second. Come on. Copy. All right. Is there an IB range that precludes you from initiating any trades, i.e. a very wide range? And that's exactly it. A wide IB range is always a caution to me. So like if I have, if this is the IB and we think about the ATR, because we can't set an expectation of the IB based on implied volatility, but I'll look at the ATR, and if I am trading 150 to 200 times 200% of that IB, I am really more looking for potential failure back inside of that initial balance and not looking to go with it. Are there times when you see a super wide IB like that and we still get out and go run? Yeah, there may be 3 or 4 of those ever. More likely than not, you're gonna trade back into this range. So at the very least, you may still go in the direction with that participant, but you're absolutely gonna make the auction come back to you before you do that. And even to that example of if I see 2 standard deviations, if it let's say that's later in the day, there may be a reaction down here. I come back to 1 standard deviation, look to enter, or maybe I do 1 here and I add 2 here, and that's my total 3. That can also be an opportunity. But those when the auction's pushing like that, that's helping you see who's in control. And one of the best things we can always do is align with who that participant is. Some days it's more clear than others, to be fair, right? So when it is clear, awesome. When it's not, it's definitely challenging. So okay, same next steps this week as last week. How good are you at predicting where the auction is going to go? It's to some degree, it's like an if this, then that. Hey, if I get past this, likely the auction's going to go. If the auction accepts here, it's likely building to go in this direction. What would happen if I use the 4 questions to define my trades? So if you're not doing that, go back and try to express your trades as a 4-question trade. If you're not sure, shoot me an email. Send me your trade and say, hey, I think, is this a 4-question trade? Here's how I would answer those questions, and we'll give you some feedback on that. Helpful, not in the game of this stuff's hard. This stuff's hard enough, gang. We don't need to beat anybody down. We need people need help. We do have Discord, so you can go to our website and sign up for the daily outlook, and that'll invite you to Discord, where we kind of look at plans and look for these playbook trades. And I do have every week I release kind of a couple blocks of time every week that are set aside for just insight sessions. What's an insight session? It's just 30 minutes that you can use with me to go over a 4-question trade, or ask a question about a market, or whatever it is that would be helpful. It's helpful for me to look at interesting trading challenges. There's no BS. There's no sales pitch. Let's just work on something. But if that's not interesting to you, or if that feels too risky, or if you're like, I don't want to do that because then I might get information that I've been chasing something that doesn't have high expectancy, then you're probably exactly the person who needs to decide what, because we need to be successful in this business. You need to be able to recognize where you're not, where you still have stuff to learn. It's a continuous improvement process. I have had years where things are real clear, and in years where something in the market changes that I have to adapt to, and it takes time to adapt to those things. You have to kind of have a tilt always toward continuous improvement. So even if you had edge and you were really consistent at one point and now it's not working, that's not saying that you're a failure in any way. There could seriously be something that changed in the market that your whole system wasn't built around. So you just got to retool. That's what we got to do. And so going after that's part of what makes this thing so interesting, is that you have to kind of keep going after those things. So thanks for this. Interested to see what comments you have about the trade. I don't know how many people are gonna are posting trade replays where they lost on most of them. But I do that, one, because you can see how to manage risk. It doesn't do any good to come into a trade. I mean, again, when we pick these for random, I don't know how they're going to play out. I don't remember, because I'm trying to help you experience this in real time. So it's the risk thing, and that keeps you in the game, and it's being in the game then for when stuff is real clear is when it's super fun. So, all right, have a great holiday, and we'll be back next week. We'll be on Friday next week, and so look for the invite to the next one. And the reminder, there is a link to the forum where you can submit questions. It's in the registration, so feel free to fire those out. And if they're light questions, we'll kind of cluster them and rock and roll from there. But if I don't see you before, peace.